Welcome back to Explain the Charts, everyone. Today, September 25th, 2025, we're focusing on the NZDUSD pair, which is currently facing significant downward pressure and has been dubbed vulnerable by market analysts. Let's start by looking at the broader economic landscape influencing this pair. Recent news indicates the NZD/USD pair is trading near mid 0.5800s, hitting a 3-week low and extending its losses for a second consecutive day. A firmer U.S. dollar is a primary driver here, buoyed by Federal Reserve Chair Jerome Powell's recent statements. Powell emphasized balancing high inflation and a weakening job market, which initially helped the USD gain traction despite expectations of rate cuts. Furthermore, positive U.S. economic data, particularly a sharp drop in jobless claims, signaled continued strength in the U.S. labor market, further boosting the greenback. This USD appreciation is noteworthy, occurring even with market acceptance that the Fed might lower borrowing costs twice by year-end, which traditionally weakens the dollar. On the flip side, the New Zealand dollar is weighed down by increasing bets for more interest rate cuts by the Reserve Bank of New Zealand. A disappointing Q2 GDP print, showing a 0.9% quarter-on-quarter contraction, reversed prior gains and missed estimates, fueling expectations of a 50 basis point cut at the upcoming RBNZ meeting. Minutes from their last meeting revealed a 50 basis point cut was actively discussed, underscoring a dovish RBNZ stance. Such divergent monetary policy outlooks between the Fed and RBNZ create a clear fundamental headwind for NZDUSD. Upcoming U.S. macro releases are critical. We have the final U.S. GDP print and durable goods orders later today, Thursday, September 25th, and the U.S. Personal Consumption Expenditure, PCE, price index on Friday. Strong U.S. data today or tomorrow could trigger a hawkish repricing of interest rate expectations, further supporting the USD and pushing NZDUSD lower. Conversely, weak data might alleviate some pressure on the Kiwi. Now, let's turn our attention to the daily chart to see how these fundamentals are translating into price action. Looking at the one-day time frame, we can observe a clear downtrend emerging since the beginning of September. The pair has consistently formed lower highs and lower lows, indicating strong bearish momentum. The recent candle from September 24th shows a significant drop, closing well below its open and pushing towards new multi-week lows. Focusing on the period from early September to now, visible on the daily chart, we can see the price attempting to break above the 0.5980 resistance level around September 11th. This attempt failed, leading to a sharp reversal, confirming 0.5980 as a significant resistance. More critically, the pair has now broken below the key 0.5850 support zone, a level that analysts highlighted as crucial just a couple of days ago. The candle from September 24th opened at 0.58567 and plunged to a low of 0.5805, closing at 0.58149, confirming this breakdown. This move is a direct reflection of the firmer USD and the increasing dovishness surrounding the RBNZ. The substantial volume accompanying these recent bearish candles further reinforces the strength of this downward move. This break below 0.5850 is a significant technical development, opening the door for further losses. Traders who were stepping in with a defined risk below the support based on earlier analysis would now be stopped out or reversing their positions. Switching to the 1-hour chart, let's examine the recent price action more closely, specifically from September 23rd to the current time. We can see the price oscillating around the 0.5850 level on September 23rd, attempting to find stability. However, as the U.S. dollar gained strength and RBNZ dovishness became more pronounced, a decisive break downwards occurred on September 24th. The hourly candles show strong bearish impulses, pushing the price from near 0.587 down to the 0.5805 area. This confirms the vulnerability cited in the news and the breakdown of the established 0.5850 support zone. The previous tight range between 0.5863 resistance and 0.5843 support, mentioned in earlier reports, has clearly been violated. These levels now likely act as immediate resistance for any potential upward corrections. Now, zooming into the 15-minute chart for the very latest price action, we observe the pair attempting to consolidate. The price is currently hovering around the 0.581 to 0.5816 range, indicating a temporary pause after the sharp decline. There's some minor consolidation, but no clear bullish reversal signals are present on this short time frame. This tight range suggests that while bearish momentum might have waned in the immediate hourly candles, the overall downtrend remains intact without a strong catalyst for reversal. Traders should monitor this tight range closely for any breakouts, which could signal either further capitulation or a slight retracement. For the short-term outlook, the bias remains strongly bearish for NZDUSD. The combination of a firmer US dollar, disappointing New Zealand economic data, and a dovish RBNZ points to continued downside pressure. The breakdown below the 0.5850 support level is a critical technical signal reinforcing this view. Bears will likely target the 0.57 handle as the next major psychological and technical support level. Any short-term rallies are likely to be met with selling pressure around the former support of 0.5850, now acting as resistance. A significant bullish reversal would require surprisingly weak US data or a sudden hawkish shift from the RBNZ, which seems unlikely in the immediate future. However, such a strong short-term downtrend can often lead to a bounce, so caution is advised for aggressive short positions. In the long term, the trajectory of NZDUSD will heavily depend on how the Federal Reserve and RBNZ execute their monetary policies. If the Fed continues its projected rate cuts, eventually the USD could lose some of its steam, potentially offering a lifeline to the NZD. However, if the RBNZ pursues more aggressive easing, the Kiwi could face sustained pressure, irrespective of broader market sentiment. Global risk sentiment and US-China trade tensions, which typically benefit antipodean currencies like the Kiwi, could also play a role in a long-term reversal. A decisive break back above 0.5980, the September 11th high, would be a strong indicator of a shift in the longer-term bullish momentum for the NZD. Until then, the path of least resistance appears to be downwards. To recap, important price levels to watch for NZDUSD are immediately the 0.5805 level, which served as yesterday's low and acts as a crucial immediate support. Below that, the 0.57 handle becomes the next significant target for bearish traders. On the upside, the 0.5850 level, previously strong support, has now flipped into a key resistance zone. Further up, the 0.5980 resistance, a high from mid-September, represents a more substantial hurdle for any bullish reversal to gain traction. The 0.6050 level would be the next major resistance if the pair manages to overcome 0.5980. Our unbiased prediction for the very short term is a continuation of bearish pressure. There's a high likelihood, perhaps 70 to 75%, that NZDUSD will retest or break below the 0.5805 level, especially if today's U.S. durable goods orders or tomorrow's PCE report come in stronger than expected. The conditions reinforcing this likelihood are sustained U.S. dollar strength and continued dovish rhetoric from the RBNZ. A moderate probability, around 40 to 45%, exists for a bounce towards 0.5850, primarily if U.S. data disappoints significantly or if global risk sentiment improves rapidly. However, for a sustained move higher, the pair would need to reclaim 0.5850 convincingly. A move towards the 0.57 handle has a strong likelihood of 60 to 65% if the overall bearish sentiment holds. The Fed's projected rate path and RBNZ's dovishness are the most critical factors influencing this. Look for price action around these levels for entry and exit signals. Beyond these technical levels, keep a close eye on the U.S. durable goods orders report expected later today at 12:30 Universal Time Coordinated. This will provide a timely indicator of manufacturing momentum and private sector capital expenditure, directly impacting Q3 GDP tracking. Also, the U.S. PCE price index on Friday will be crucial as it's the Fed's preferred inflation gauge. Remember, as always, risk management is paramount in such volatile markets. Utilize stop-loss orders as anything can happen at any moment. That's all for today's in-depth analysis of NZDUSD on Explain the Charts. We hope this helps you navigate the market.